Hi everyone, my name is Simon Mashevich from Itemized Accountants, and in this video we're going to be talking about the US tax rates, income tax rates for 2024. So whilst you're going into this detail, if you want some free UK or US tax calculators, you can do so on our website. The QR code is now appearing on your screen. Alright, so let's go into the US income tax rates, the standard deduction. First of all, the standard deduction for married couples filing jointly for tax year 2024 rises to $29,200, which is an increase of $1,500 from last year, which is not too bad at all. For single taxpayers and married individuals filing separately, the standard deduction rises to $14,600 for 2024, an increase of £750. Now, if you add those two, if you've got two people that are married but single, adding those up, then obviously, of course, you go to $29,200 again. So you're not losing out. Now, the big thing for you to think about whenever you're doing your taxes is standard deduction or itemized deductions. You can choose which one you would take. So for itemized deductions, what you want to do is compare all of these bills that I'm going to share with you now. And if this exceeds your standard deduction, then choose the itemized deductions instead. So the first one is medical and dental. If you and your spouse have medical or dental treatment throughout the year, keep your receipts. This will help you to reduce your taxes, especially if it exceeds your standard deduction, coupled with the other expenses that I'm going to share with you now. The second one is state and local taxes. Again, if you have a property, you pay state and local taxes, then of course you will be adding that as well. Mortgage interest on your home or second home of your real estate property. Charitable donations and other items, miscellaneous items such as unreimbursed employee business expenses. So if you've paid for mileage but you've not been reimbursed, you can add those up to say, hey, I've not been reimbursed. I'll have that against my taxes when I file my return. So now what you need to do is add up all of those expenses and see, is it more or less than your standard deduction, and take the better one for you. Now we're looking at the US IRS income tax rates for 2024. And we can see the percentages. You might want to pause this video. It is scale, so the greater income you have, that slice of income will be taxed at the different rate. So in this regard, we're looking at the 24% tax rate. If you've got income over $100,000, moving it to 32% if you've got income over $191,000. Of course, if you're married, then that doubles up pretty much to $383,900. So it's now an opportunity if you're thinking about, well, how should we file our taxes? And I'm going to give you a bit of a snippet idea of how you might want to do that. So tax filing tips for married couples. What you want to do is do a tax return that is based on you filing jointly. So add up both of your income streams, put that to your tax return, see what the tax is. What you then want to do is to run another set of calculations based on you filing separately. So husband, wife, civil partner, adding up your own individual income, taking the standard deduction for you as a married filing single, and then see how much tax you would pay. And what you want to do is, by making those comparisons, you want to see which one you pay the least amount of taxes. Is it for filing, married filing jointly or single? Take your pick, pay the least amount of tax. If you want some UK or US international tax advice, feel free to use that QR code just appearing on your screen. And then next thing you need to think about is, where should I live? Because depending on the state you're living in, the greater taxes you'll pay. And if we look at New York, you've got 10% over there, and California, 13%, the biggest two states that you will pay additional taxes than you will with the Fed. So areas such as Nevada, Texas, and Florida have no income tax rates at all. So is it a good time for you to move state?